Yeah, thank you very much also to the organization committee for giving me the possibility to speak to you here. In the interest of time, I will make it hopefully very short and crisp because the weather is nice outside and we should probably still have a chance to enjoy the sun. But before to that, I'd like to talk about natural catastrophes, and really not just here in this region, but we talk about a global protection gap when we look into NATCAT insurance. And I mean, if it needed any further proof that this is a global topic for all of us, then I think the 2017 year with all the hurricanes and earthquakes around the globe has given us a very strong evidence of how significant that gap actually would be. I mean, we have a year where insured global losses from disaster events accumulated to 144 billion US dollars. However, the global economic loss related to the same events accumulated to something like 37 billion US dollars. So we are talking about a global protection gap of over 193 billion US dollars of insurable risks which are currently not insured. When you look into the insured losses in 17, and I mean, I will not argue with Bruce Sampson's conclusion on the reinsurance market and the availability post-loss. All I'd like to say, when you look at the accumulation of the hurricane losses, Harvey, Irma, and Maria, over time, we talk about a very substantial year of loss for the international reinsurance markets, and what the year has certainly shown to all of us being in this industry is, and I think Bruce made a very good comment on that, is it shows how resilient the industry has become in the meantime in being available, being a functioning industry after such an enormous event. I think in that sense, and it can clearly see most of the losses we've seen in that year 17 have been weather-related catastrophes. Still, there's one common thing about the period we are looking here since the 70s until now is, whilst the total average economic losses are on a constant move upwards, the actual penetration of insurance and the average insured loss related to this has been in relative terms rather stagnant. And that obviously is a question for you as representatives from insurance companies, but also for us as a reinsurer, why insurance cannot play a stronger role in this. I don't want to spend too much here on this one. I mean, combined insured losses 92 billion just from 3 hurricanes. You can see here the distribution. All that figures are from our recent Sigma study. So if you want to read further details about the losses and specifics, then please check it out on our web page. It's the second costliest event year ever in terms of hurricanes. And I think in that sense it's quite remarkable that that only a few months after such a year we are in a position that, in example, PAIT, with their reinsurance program being up for renewal on 1st July, will most likely be in a position to place that relatively smoothly in the market. Looking into Romania, I think we've seen the success story of Turkey, and I clearly liked also this this strong push on the sales with connecting it to electricity bills. I think that's a good idea, but I think also PAIT can show a quite impressive success stories. I mean, looking into empiric events 1940, 1977, I mean, for the 1940 event, more than 900 million in loss of such an event would today be insured with the PAIT scheme. I think that's a quite remarkable figure. penetration is still low. You can probably still ask what would be the economic loss of such an event if it occurred in today's world. I don't dare to put up any figure here, but I think it's a good start. The question is how shall we proceed? And I think when looking into parametric NATCAT insurance, and this has already been touched in the previous presentations, I think one important aspect about when you look into parametric insurance is technology. I mean, the product is in such relatively simple, and I will come to that in a minute, but the question is really how can you reach out to a large consumer base within a relatively short time frame, and I think technology is a key response to that. Parametric solutions, what is it about? To put it in short, a parametric product is something where you are no longer looking into an actual indemnity at an insured location. You look into an index, in example the severity of an earthquake, and by that define an insurance coverage. So relatively straight. We wouldn't even need drones to do loss inspections because the severity of the quake defines the insurance coverage. But that's how the product is described in a simplified way. So you have a trigger being severity, you have a reporting agent, and you have a claims and premium payment mechanism. That all sounds relatively simple and easy, and simplification, as Leonardo da Vinci said, is an ultimate sophistication. It's fast. It's a fast access to cash, which I think is a very crucial factor related to natural catastrophes. If people only receive coverage or money after half a year or even more, then the insured risk might already be gone. It's flexible and it can be a very affordable product. But we believe it needs a technology, and in that sense we have developed a digital platform where you can basically run it from the policy origination. The underwriting is embedded, so the whole product and pricing engine is integrated in such a machine to the actual claims payout system. So that's something which is basically ready to be implemented in various markets. We are on the run with it already in a couple of aspects. We do a flight delay insurance product across Europe related with such a platform. We do shake vouchers in some parts of the world where we provide quick cash after an earthquake to consumers based on a parametric product, and we also offer loss of income cover based in this platform for tropical cyclones. As I said, it offers the whole platform from getting a quote to the automated or fully automated loss settlement. So it's a solution which would come across at very low costs, and it could actually all be handled with the mobile phone of a potential consumer. So it's like an app on your mobile phone where you can basically get cover and get compensation within. And that's just a food for thought also for the Romanian market, looking into such an automated cloud-based application as a possibility to reach out to a lot of consumers which are currently not insured with a relatively cost-efficient type of product. With this, I leave it with the audience to judge if that's a value proposition. Implementation phase, and we have already a couple of experience with this project, is we can basically go to market within, normally within 6 months up to a year. It can be rolled out, so it could be a quick implementation. Thank you very much.